Alicia Levine is here, head of investment strategy, equity advisory solutions at BNY Mellon Wealth Management. Really, I would summarize your viewpoint as like, what's not to like here? Why fight the tape?
Why fight the tape? Look, we think we're in one of those great situations that you saw at the end of the 90s, really, where the Fed's going to cut, but not that much. Growth is coming in better than expected. The labor market's holding up, and the data are just telling you that the economy is reaccelerating. So that means earnings are going to be okay. So what's not to love here? What's not to love is does it come with another bump in inflation, right? So that's the risk out there.
Well, that's the weird thing, what you just said. Better than expected growth and interest rate cuts on the horizon. That's why we keep asking where is the logic here. But if that is indeed the case, that's best of both worlds.
So we've been saying, on the cut side, we've been saying less and later, which may not be grammatically correct, but there's an alliteration there. So it's less and later, because we think that the market, that the economy,
right?
Fewer and later. But it doesn't
less
sound
and later.
good.
No, you're right.
But look, the economy is holding in better than expected. And I just want to point to the PMIs on the manufacturing side. We're finally out of that downturn, and new orders are above 50 coming in strong. And new orders on the manufacturing PMI tend to lead S&P earnings by about 3 to 6 months. So we're coming out, we've bottomed. We're moving higher on the manufacturing side, which had been the drag on the economy, not the services side. So what's not to love? And Powell, if you think about what he said yesterday, is telling you they want to cut in June. They want to, right? So it's going to take a lot on the inflation to get them to move off of that, I think.
Because a strong economy, if you could do it with low inflation, you could cut, I guess. But that you think inflation could reaccelerate because the economy's reaccelerating. I
think there's some evidence that it's stickier on the way down. Obviously, like if you just look at the last 6 months, inflation CPI is stuck between 3 and 3.5 for 6 months, and it hasn't really moved off of that. So it has to be moving lower. But the Fed so far does not seem as if they are overly concerned. Now let's get to the next thing. The market's pricing in 3 cuts. Fed says 3. What if it's 2? I don't think that changes the story of positive for risk assets because the Fed pivot remains, and the pivot is no longer a hiking bias. So even if you get to 0 cuts, I still think it's okay as long as growth holds in there. As long as growth is there, it should support the market.
For whatever reason, election years, even though the Fed's not political, but they're usually friendly for the markets, right? So that goes into it. We're also seeing some broadening at this point in the participation. I'm going to sneeze, I think, in the participation.
Yeah, no. So, I mean, one of the big misnomers is that this has been a very narrow market. Maybe that was last year and maybe November, December. But we saw it since the beginning of the year. Financials, materials, industrials, really, and energy sectors participating. And by the way, these are deep cyclical. So what is that telling you? It's telling you that we may have reached the trough in growth, and we're reaccelerating here. So I actually think the market's pretty healthy. 88% of the S&P is above its 200-day moving average. You don't get tops from that. You can float around and bounce around consolidating, but you don't get tops when you get an increasing percentage of the S&P constituents above the 200-day moving average.
And the tech trade continues, and I was just thinking, the Magnificent Seven existed before ChatGPT, I think. So even before this transformative phase that we're in right now, we still love those. Maybe it's only 4 now. It's not the Magnificent Seven. But now you got to layer AI onto your feelings about the tech trade.
Right.
And it's
a great feeling.
It must be. It's more than just additive. It would be 1 + 1 = 6 or something.
So, look, I think most of us were around in the late 90s when we had .com boom and everything like this. I don't see that as exactly analogous, but the sense of increasing productivity and increasing margins and enormous growth in a sector of the market that then expands to the rest of the economy is there. And that is the same story. And that's why I think we're early in this growth and the productivity. The margin growth in the S&P is coming from the top 7 names. The margins of those Magnificent Seven are double that of the rest of the S&P. Wow. So the margins are coming from that, and that's why we love that sector. It's great that the market is expanding, but in the end, in the last 15 years, there's only 1 year where tech underperformed, and that was in 2022, exactly when you'd expect.
That's weird. It's not like they don't have CapEx. I mean, if you're involved in chips, if you're involved in AI, if you're Amazon and you're involved in building out delivery system, it's not like you don't have CapEx that goes into that too.
They have CapEx, but they have so much cash flow that they can play with it to bring it down to earnings when they need to, in a way that a smaller cap company can, or more capital intensive companies
What
can.
you said is play with it. You think it's almost manipulation, like we're going to cut our CapEx to get it here?
I think there are quarters where the large cap tech gives you earnings because they need to give earnings, and then they go on with investment. And I don't think that's manipulation. I think that's managing the income statement and the balance sheet.
Basis.
And they're successful at it because fundamentally the businesses are strong and growing. So they're able to do that because of the cash flow situation. And so, getting back to, do we rotate at all, or what about the broadening? We still think large cap America is the place to be. We allocate, across all asset classes, but in the end, the innovation's here, the productivity is here, and the AI is here.